Greetings everyone, thanks for joining. In today's video, we're going to do a walkthrough on how to select the best market for Section 8 investing. So let's jump right in. Alright, so one of the great things about real estate and Section 8 in general is there's already been a lot of research that's been done about different markets. And we don't have to reinvent the wheel. We can leverage the work that a lot of other people have done to get a fast start. I don't want to trust anything research-wise that's been done with it by anyone else blindly, but it'll still give us a good starting point and we can go from there. So in that vein, I'm just going to do a quick Google search, best markets for Section 8 rentals. We'll take a look at this article here. It'll be a pretty in-depth article this person's put together. They got some financials, some demographic, and some other data here. Looks like they got Cleveland at the top of the list. Let's take a look and dive right into Cleveland. I happen to know Cleveland's a great market, but let's go through the exercise on how to validate that. So first things first, we have a market in mind. First thing we want to check, is it in a landlord-friendly state? So you can see here, I'm going to do a quick Google search just for landlord-friendly states. See what kind of infographics. I always like to use this infographic. Take a look at that. Zoom in here. You can see that it's in that maroon color. So it's not in the bright red like Arkansas or West Virginia. That's okay though. It's still in that area of landlord friendly that we want to be. That means if we have a problem, need to do an eviction or something of that nature, we'll have more of a seamless experience than we otherwise would in a not landlord friendly state where those type of things can be a nightmare. They're not a fun experience in any situation, but in landlord friendly states there's a massive difference in terms of what you're able to do and how quickly you're able to do it if need be. So that's a huge thing that I always check first. Is it in a landlord friendly state? Eventually you'll get an idea and memorize this list, but if you're ever in doubt, just pull up a quick Google search and there you go. So next thing we want to check is the taxes. Taxes and insurance are two of the main factors that are going to come into play when calculating your expenses and determining ultimately what your cash flow is going to be. So we'll do a quick Google search there. Landlord taxes by state. Just pop up this first article here. I'm going to scroll down. This has it from best to worst. And we can see Ohio is down here on the bottom half, 43 out of 50. So not great for taxes. So we'll keep that in our mind as we're looking at other factors here. So we're in a landlord-friendly state. Anecdotally, we can tell by others' research that it's a good market, but we've noticed here that the property taxes are higher. So next thing we'll look at landlord insurance. Generally speaking, if you have property taxes that are high and insurance that are high, it's enough to be a major red flag that's probably going to prevent that market from being feasible in most cases. If you have high property taxes but low landlord insurance costs, it can be a wash and sort of a non-issue. So let's take a look at what Ohio is here. So I'm always going to go to an article here that has an estimate on the median landlord insurance cost by state. And remember, we're talking about landlord insurance. We're not talking about homeowners insurance. A lot of times when you're looking at online estimators, things of that nature, by default, they're going to give you estimates on homeowners insurance. Landlord insurance is different. You're going to get landlord insurance, not homeowners insurance. And that landlord insurance is more expensive than homeowner insurance. So keep that in mind when penciling out your deals and getting estimates. You want to search specifically for landlord insurance. So we'll scroll down to the graph that they have here. Remember, these are just estimates. Once you determine what market you want to go into and start looking at deals, you want to get quotes on a specific property. Both taxes and insurance are property specific. So while the estimates are a good gauge and a good starting point, you always want to get an actual quote on the property and not go blindly based on the estimates you see here. But they are a good starting point. So we can see here Ohio at 946. Just eye testing that's pretty good compared to some of the other states. Let's take a look at the breakdown they have here on Ohio. You can see here Ohio is a good state. The cost of landlord insurance in Ohio is about $952 a year, which is significantly lower than national average. So that's awesome. Even though we have higher taxes, we have a significantly lower insurance burden, which is going to cancel out the higher taxes and then some when it's this low. So we're in business so far. So next, let's take a look at an inventory. So if you have a landlord-friendly state, and the taxes and insurance are where you need us to be, but you don't have any houses to buy, it's not going to be a great market. So we'll search Cleveland here. I've removed the boundary. That's going to show me the surrounding area. Remember, public housing authorities generally are going to cover the entire county. This is something you'll always want to double check. But for Cleveland, we'll look at the surrounding areas and the event that they're covered by the housing authority, which will validate. For my buy box, I'm going to put up to 130K. I generally will not go that high for a Section 8 house, but I'll still search within that range, because if I can find deals of houses on the upper end of that have been on the market for a long time, I can still get them landed with good deals below what they're listed for. 3-bed, 1-bath. Got this narrowed down to single family homes, and we can see here the results for 327. 327 is a lot of inventory. That means there's a lot of different choices for you, the investor, a lot of different at-bats to make offers and land good deals and hopefully find something that pencils out for you deal-wise. So everything's good so far. Landlord friendly, tax a little up a bit high, but that's okay. We got lower insurance. We got a lot of inventory. Now let's take a look at what the FMRs are. I'm just gonna Google HUD small area FMR. I'm gonna take a look at the small area market rents. That's gonna show me by zip code what the potential rents I could be getting in the area are. Just click on this to bring up the table. Gives you a little chart here where you just select the state, Ohio. Then I'm gonna select Cuyahoga County, which I happen to know is the county that Cleveland is in. And boom, here we go. It gives us the FMR on the HUD level. So remember, we're gonna have to look at what the payment standards are on the public housing level. But on the HUD level, the FMRs are looking pretty good for a 3-bedroom. So we got 1,500 on the low end, some 1,300s here, a couple over 2K. We'd say anecdotally, just spot checking these FMRs, this is well above what you'll see in a lot of markets. It's not necessarily above what you'll see in like an LA or an Oakland is another example I can think of where really high FMRs. Problem with both of those markets is not only they're not in landlord friendly, so it's probably the worst state you can get into being a landlord, but the property values over there are astronomical. So the entry to get into properties in those markets is so high that even with the high FMRs, rarely if ever will you cash flow unless you've been holding the property for 30 years. So even though it's not as high as those areas, it's still a really good cash flow market based on what I'm seeing here, with available inventory at under 130K, landlord friendly state. Property tax a little bit higher, that's okay because the landlord insurance is lower. So let's take a look at the housing authority and see what our experience might be like working with them. First, I'll just show you where I Google searched here. Cleveland Public Housing Authority, it brings up the county, so that validates we know that the county of Cuyahoga is covering Cleveland. We'll click on that. We can see that their site's relatively updated, which is good. Generally speaking, a larger metropolitan area like this will have an updated site. You might see a little antiquated site on a smaller area, but this one looks pretty good. You got interactive visuals here, nice menu. We'll go to housing. Under landlords, we'll click rent. Got a good breakdown of rent reasonableness, what their payment standards here are. Here they have a table tool you can use here. So that indicates they're using a small area FMRs for their payment standards. So we'll take a look at 44022. Looks like for a 3-bedroom, they're offering a payment standard of over $2,500, which is really good. So we'll spot check that back on the HUD list. A 3-bedroom here is $2,100. So they are using above the HUD FMR, which is really good. Not everywhere does that, so they're using at least 110%, at least in that zip code. You can check different zip codes, it might be different. Let's use this bottom one here. 3-bedroom 1720, 3-bedroom 1570. So they're also using above as well. So while that may differ zip code to zip code, it's still indicative of the housing authority's overall approach, which means they're not shortchanging landlords. They want people over there investing and providing housing probably have a lot of voucher holders, which is generally something consistent with what you'll see there. When a housing authority uses above the FMR, is they have a demand that they need to meet, so they'll make it more enticing for landlords to invest there by using above what the FMR that the HUD sets is. So that's awesome. For a landlord, you want to see that. Last couple things we'll check here. Is the population growing? Is it declining? You can see here Cleveland's population has been declining, but the rate has slowed, which is awesome. I would say that a rate of decline that small is negligible. If you're seeing multiple percentage points decline and a trend in the wrong direction, it's enough to be a red flag. If you're seeing something as small as this, I would say not necessarily a point of concern. Cleveland's not necessarily a vacation spot or dream location for a lot of people, so I could see why it wouldn't have a ton of people moving there. The weather's whatever up in that area of the country. It is a major metropolitan area though. They have sports teams, there's a lot of things to do, there's a downtown, so it's the type of place where it's not a resort town, but it's still a town that has some positives for people living there, and that's something where you want to consider that before you select a market. So overall though, the decline's fine here. We'll take a look next at I'll just do a quick Google search on what the real estate outlook is for Cleveland, get an idea of what the sentiment is on the area. You can see that the median home sales price is $125K. That is well below the national average. National average is like $400K at the time of this film. In the state here alone, it's $263. So Cleveland is below the state level and well below the national level, which for an investor is great because it means you can afford to scale up in this market and capture that cash flow that they're offering you. All right, so that's the overall outlook. We'll do a quick research on how many voucher holders there are. So if you have a landlord-friendly state and acceptable taxes, low insurance, really good FMRs, nice site from the Public Housing Authority, using an awesome payment standard of those FMRs, all that's great. But if you don't have any voucher holders to rent to, it's essentially pointless. So this right here is super important, is the overall takeaway there. You want to make sure that the place that you're looking at has voucher holders. It's not the end of the world if it doesn't. You'll just rent it out to the private pay. But at that point, why are you doing all this work to get into Section 8, right? You want to make sure that if you're utilizing this exit strategy, that it's a situation that it's going to work. And again, the reason you utilize this strategy is that guaranteed rent, 10 to 30% higher above market rents, less turnover, and more leverage as a landlord in terms of what you can do to make sure that your property is not trashed. If you're going to take advantage of all these benefits and invest in a market with the intention of taking advantage of them, you want to make sure that you got available tenants. Last thing you want is to do all that work, find a deal, land it, get it ready to rent, and then find that you don't have any voucher holders that are interested in it. Especially if you've done what we've taught, done it in a quality area, you set yourself up for success. Don't overlook this detail. So you want to make sure proactively you take a look, and we'll take a look here. Quick Google search, click on this. You can see, looks like Section 8 has 20,000 households using federal subsidies. That's a lot of voucher holders. So you can be confident if you're investing in Cleveland that if you do everything you need to do correctly, meaning you've landed a quality property in a place where people want to live, if you've executed on that part, as soon as you list that property, your phone will be ringing off the hook with this many voucher holders. Just mathematics at that point. It's not necessarily true in areas where there aren't that many voucher holders, because again, one of the positives with Section 8 is your tenants tend to stay in the property longer. And that's great when you have it rented out, but when you're trying to get someone new, that means you got to get someone to move from where they're at. If they're not moving that often, you're going to have problems if you don't have a lot of voucher holders. So 20,000 puts you in a good spot. So far so good. Landlord-friendly state, taxes or whatever, but insurance is low. We got population growth that's negligible. We got overall a big metropolitan area with some amenities and some attractions. We got a public housing authority that looks updated, a site that's very responsive. We have a lot of inventory in the buy box that we need to be at. We have high FMR and payment standards that mean we're going to get good cash flow. We'll get a lot of possible tenants here. Last but not least, let's take a look at the crime. Do a quick Google search here. Is Cleveland high crime? You can see that it is higher than the national average. Generally speaking, you will find this to be the case with most Section 8 markets. That's just the reality of it. Doesn't mean necessarily, though, that you need to invest in the areas that pertain to the high crime. And that really is the sweet spot. I'll say that a million times. A lot of people still won't get it. They still get seduced by these deals in the hood. Believe me, learn from my mistakes. Don't do that, right? High crime rate in Cleveland doesn't mean you have to invest in a high crime rate area. This is where leaning on your property manager and your team, if you're not local and you don't know the area, real estate agents, property managers, even your contractors, you want to lean heavily and secure a team of people in that area who know the area. I'm talking about know it to a T, to a block, to a street, to a neighborhood. So that when you're looking at a good deal, you spot check it, you run it by them, they'll let you know whether or not you're overlooking an important factor. I'll use LA as an example where I'm from. There are parts of LA where, although it's not as bad as it used to be, there's still parts I wouldn't drive through them. LA is weird though, because you could take that area that you wouldn't drive through and 3 blocks over, it'll be fine, right? A lot of cities are like that. If you didn't know better though, you might make a mistake either investing there or not investing there because you're just scared of what the area is called. So you would use someone on the ground who knows the area, because the people who are looking at the house, the tenant holders, know the area as well, and they'll know where not to go and where is okay to go. So using that same local knowledge is going to be critical in areas like this to make sure that you land a quality home that people want to live in. All right, so overall, I can see why this guy had Cleveland top of the list. A well-known market for Section 8. It's kind of an easy layup one, but I did it just to sort of run through the exercise. The caveat to all this is that, so you got a landlord-friendly state, you got the expenses in the right place, so okay taxes, very competitive landlord insurance, FMR is really good, payment standards above what the FMR is. Couple that with a good amount of inventory, you get a good team going, you find the best areas, land some really good deals, all that's great. However, it also means that it's more competitive. Good markets are known. You still want to do your research and not blindly follow anything that you see online and validate assumptions and go from there, and validate assumptions based on each property as well. Remember, the taxes and the insurance are based on property, so don't just go by these median numbers. But once you do that, you'll find that a lot of other people have done the same thing in a market like Cleveland, and you'll find that if nothing else, it means you'll really have to hone in on your skills to find and land deals that are off market, because a lot of the on market deals people are going to be making offers on, and that's going to get a bidding war going between multiple people. If you're one of them, you don't want to be in that position. I would say in Cleveland though, in my experience, it's not as bad as you'd think based on how much potential there is in cash flow, and a lot of that has to do just with the inventory. Now, market factors change, right? That could get way more competitive really quickly. In the last 2-3 years or so, it's been more of a down market, more of a buyer's market, which is really more reason to get as many properties as you can, which remember, you can do without using any of your own money. You don't need a ton of money to get started. If you know what you're doing, you can get money back using double closing immediately, which we cover in depth in the course. So hop on it. Right? Stop making excuses and start making it happen. Look at different markets like this, just like we just looked at it. See which one works best for you. I'm going to say if you're looking to scale nationally, Cleveland's always going to be one of those markets that should be on top of anyone's list because the potential is that good. But irrespective of where you go, just hit the gas. Get going. Stop being controlled by limited beliefs. Educate yourself. Join the free community. Join the course. Get the information you need to get knowledge-wise and get going. Don't miss out on this opportunity. The difference between people who are successful and people who aren't is that successful people do what others won't. That's the only difference. So you decide what it's going to be for you. And if you like this video, you found it helpful, go ahead and click on that like, give me a follow, and most importantly, check out that community on School where we go over in depth, step by step, how to select a market, how to select an area within a market, how to build your team, how to find and land the best deals, including landing deals off market, which is often where the best deals lie, how to do all of this without using any of your own money, how to land quality tenants, and how to really grow and achieve massive scale and build immense wealth and financial freedom through investing through Section 8. So thanks for your time. I'll see you on the next one.